On behalf of all of us here at Bramasol, I would like to welcome everyone to today's webinar, SAP Revenue Accounting, Further Scenarios in version 1.1. This is the latest installment in a multi-part series around revenue recognition and how it impacts your business. Today we will be focusing on 3 revenue accounting scenarios. First, the action of using SAP RAR to add linked aspects to a revenue contract. Second, using RAR for projects. Third, restating multi-period license sales. Throughout the duration of the webinar, everyone will be muted. If you have any questions, please submit them using the questions box. Questions will be answered at the end of the webinar. This webinar is being recorded and will be available for viewing shortly after its completion. The slides from today's webinar are available now and are located under the handout section. Lastly, a short survey will be sent out after the webinar, and we encourage everyone to provide feedback. It is my pleasure to introduce today's speakers. Chris Ritterhern is the Director for Solution Architecture with over 30 years of business systems experience. Hans Christian Metz is a Senior Lead Consultant and Architect with over 15 years of SAP accounting experience. Both Chris and Hans are former Platinum Consultants at SAP. Who is Bramasol? We are a trusted SAP Gold Partner with over 20 years of experience. We focus on Office of the CFO solutions, such as revenue recognition and leasing, helping companies empower the digital CFO. Our agenda for today's webinar. First, we'll do a brief overview of revenue recognition. Second, we'll show you a live demo of 3 revenue scenarios. Third, we'll explain our approach and how we can help get you started. We will also have time at the end to answer questions. I would like to now turn over the webinar to our first speaker, Chris Ritterhern. Chris?
Thank you, Larry. I appreciate that. One of the things in this webinar, too, is we would like to impress upon you a key message, and that the new revenue accounting regulations are coming. It's not a choice. They're coming. You will have to do something about them. We see that the challenge for your company is getting ready now versus a do-it-later approach. As companies are looking at the regulations and starting to understand them, they're saying, geez, we didn't think that that was a deferred revenue scenario, and now it is, and we have to account for that new regulation. So let's take into account, let's start looking at this new business process and the various departments involved. Or because of the new deferral regulations itself, the way you report revenue is going to fundamentally change. So we have to be ready for what that means, and the change management aspects are very key to working with the number of departments and people and allowing yourself time to understand that and work that through your organization. We recommend starting with a new and holistic iterative approach where try it out, see how this works, socialize it with to people. If that doesn't work, modify how the revenue and accounting software process is working for your particular company and scenario, and then just keep working until you get something that meets the regulations, which the software will keep you in, and also that your people understand from long-term support perspectives and the new revenue picture perspective. So one of the key things when SAP has been writing the new revenue accounting and reporting software is they really wanted to help automate and simplify compliance with the new revenue accounting regulations. And if I think of the funnel out there of all the things that are occurring, the bills, the invoices, the revenue documents, all the transaction activity is being funneled down to the revenue accounting engine. And the revenue accounting engine then is keeping track of that for me in compliance with the new regulations. And then ultimately, as I do posting from the new revenue accounting engine, will automatically make all the appropriate journal entries per the new regulations for me. So the idea is it's very simple, very straightforward, and it's going to take care of me as I go forward with respect to meeting the new regulations. You'll see that as we go forward. I'll show some actual examples of postings, and you'll see some of the things that the RA module is doing for me automatically. So with that, let's briefly talk about the new steps here, and I'm going to turn it over to my colleague Hans. Hans, can you look at this and talk to the audience about these steps, please?
A variable as to how important they are for you, right? Depending on the industry that you're in, depending on your specific data. So, for instance, for the first step, identify the contract with the customer. For many implementations, that turned out to be rather straightforward. So we would know, for instance, we have a sales order, or we have a number of sales orders that belong together, and those are defined or are understood economically as a contract with the customer. We have, on the other hand, and on that also found that there is, in many cases, there's a lot of problems identifying all the contractual information because it might not be held in the same place, might not be documented well, might be spread over multiple systems. We've actually also now have discussions around that with Nakisa for the leasing part, because Nakisa, as you may know, is a company that provides contract management software that integrates very well with SAP, and so we're seeing that probably specifically for those implementations where there's also a leasing angle, we're probably going to work very strongly with Nakisa. We're going to recommend Nakisa for that. So how big a problem that first step is for you depends obviously on your situation, specific situation. The separate performance obligations, we will see some of that today, so there's different ways of handling that. A separate performance obligation does not necessarily mean that it is separately billed, right? So it could be something that you implicitly give. It could be a material right. It could be different things that you hand along. But if you have to perform something there, that basically means that you can only recognize a certain share of your revenue when you have performed that obligation. And you have to, for that obviously, you have to first of all identify the structure. Again, that is very closely related to identifying the contract elements. Determine the transaction price. That is by itself, on the face of it, nominally is easy, but if I'm saying nominally, you already see a hint at something that is not that easy. So we have found more requirements now around the time value of money. So the question how actually the simple passage of time and the discount that you have over time, so $1 today obviously is not worth the same as $1 in 10 years, how that impacts your transaction prices and your standalone sales prices and various valuations. That brings us to the fourth piece, so the transaction price, the allocation of the transaction price that is done based on the share of standalone sales prices. So if you have one POB, and we will see that obviously in the demo that Chris will show us. So if you have a one POB that is 10% of the overall standalone sales prices, you will get 10% of the overall sales price, because that is your overall revenue obviously. You will have to, or you will have the right to recognize that when you perform that obligation. So we're doing the allocation there, and actually I always find that some customers are very surprised that that is actually not an issue. We're barely talking about that because the system does it all automatically. It comes very naturally, right? So Chris will show you it's very, it is almost a non-issue, right? A complete non-issue in our system, in the RAR solution. And then obviously lastly, like mentioned already, so when the performance obligation is satisfied, only then are you allowed to recognize revenue. That also means that the first step, and we've had those discussions, that the first step in the posting, in the effective posting that the system does, is always basically an offset, a complete taking out of billed revenue. Because the billed revenue is not recognized revenue. You're only allowed to recognize under the new guidelines if you have performed the obligation for that share of revenue. Yeah, with that I think we're going back to Chris. We're going to see in the demo a little bit more of details around these. Thank you.
Thanks, Hans. So today, just to give you an idea of the flow of documents and transactions, this is sort of a swim lane diagram, and at the top are the various events that will be occurring. Contract is entered, a contract is changed, an event is completed, perhaps there's a return. These are the different events that occur. As these occur in the SAP ECC system, they are transferred over to the revenue accounting software module, which is considered an add-on to SAP ECC. So you can think about it as a mirror contract to your SAP Sales Contract. Now, do I have to use SAP Sales Contracts? The answer is no. SAP RAR is designed to be as an engine, so you can feed it directly from external systems, and it'll create the RAR contract for whatever that vehicle was from the external system. So you can use it in-house, so to speak, where you're using the sales contract functionality in SAP, or you can feed it externally where you have contracts created in external systems, and it just has, then you're just using the revenue accounting to create the RAR contract, we call it, revenue accounting and reporting, to create the RAR contract and then maintain the performance obligations as you go forward. To give you an idea of what we're going to be running on today, it's a very straightforward installation for those who have SAP. You need to have at least Enhancement Pack 5 on your ECC 6.0 system, and it's considered an add-on by SAP. So it's just, currently the version is 1.1. 1.2 is going to be coming out at the end of June. We'll talk a little bit about that towards the end of this webinar. But this is the landscape. It works very nicely. It doesn't require a separate server. You load it onto your current SAP system, and basically away you go. Now also, we have our demo and POC proof of concept environments completely up in the cloud. We use AWS as that. So that allows us to rapidly do prototyping and POCs for our clients where we spin off a copy for them. They can then start doing their prototyping there while they're waiting for their IT and their infrastructure people to properly install it on their production, development, and QA environment. So it allows companies to get started. Finance is usually leading the charge in this area, so they can move really quickly, get a sense of what needs to be there, get a sense of how the new business processes operate in the revenue accounting module, and then move forward. So today we're going to see 3 scenarios as Larry spoke about. We'll go through these as we we'll talk through this as we go through them, so I'm just not going to read this slide right now in the interest of time. Okay, so one of the questions that's central to revenue accounting, and Hans, I'll have him chime in here in just a minute, is, what is a POB? Performance obligation is something new that's as part of this regulation ASC 606, and it's something that can be explicitly stated in the contract or can be implied. And Hans has had a lot of experience in helping companies to understand. And Hans, do you have a few thoughts about how companies are starting to understand what a POB means to them?
Well, like I said, so what we typically, the typical approach to this is basically to kind of like first pile up information that you have in the organization, then structure that according to similar business situations or scenarios, right? And basically detail those out. So what that means is that we will typically, from Bramasol, we will typically be called in to analyze scenarios. By that point in time, there should have been already, usually, we would hope for, there usually already having been an accounting assessment done. That accounting assessment may actually already include a lot of those definitions. So it might already tell us, okay, we think we have about like 10 scenarios that have maybe like 4, 5, 6 POBs typically, right? What we found the interesting thing maybe about that, and typically there would be a calculation, but what we found the interesting thing in real life is that then once you get into the actual system and you look at the actual, for instance, in SD, the actual complexity of the data available, we very often find that the scenarios were vastly simplified. So instead of, for instance, there being a performance obligation that just stops at the same time as you hand out the hardware, we have an additional delay because of some kind of activation. Or we might have, like we will see, so we might have a linked POB, so we might have something which wasn't mentioned, but oh yes, if we hand out this piece of hardware, there's usually a piece of support that we're giving along with. Or, yeah, typically if somebody signs up for software, they typically also have a right to be later on upgrade for free, although we sell that separately. So it has a separate standalone sales price. So that has to be a separate performance obligation. In other cases, we also find that we can actually simplify, at least, well, in real life we cannot really simplify, but at least for the calculation sometimes, because if multiple services or multiple pieces of a contract for the calculation are treated the same way, you can sometimes group them together and calculate that a little bit easier. But usually in real life, like I said, it's always a little bit more complex than it's on the pieces of paper that we see at first. Thank you, Chris.
Hans. Okay, so let's get to our first scenario today. So what's a good scenario without a lot of numbers on the screen? All right, let's talk about what you're seeing here. So in this scenario, we are providing a licensed software to our customer that includes an automatic maintenance agreement. However, that automatic maintenance agreement is not billable. It's just included when you get a license from our particular company. So this is funded at 20% of the license sales price, but it doesn't show up in the sales contract. So we're going to use revenue accounting to account for the fact that we do have to do a 20% and then maintain that across the period of time that we're doing this. Now, this scenario shows 36 months. For interest of our purposes, we're going to leave, well, we'll leave it at 36 months here so you can see how it lays out. So we're going to create a contract, and then here's how the regulation applies. Because these items are individually sellable, they have their own value, and that's what the standalone selling price is in the column that's marked with the red box. So the license A has a $6,000 standalone selling price, $3,000 for license B, and $1,000 for license C. However, in the sales contract, due to discounting, bundling, and or customer discounts, we've sold it for a number that's substantially less than what our standard list price is, so to speak, or what our standalone selling price is per our understanding of what we needed to publish in the regulations. If you look back at the column where it's all red, these in turn establish a ratio of percentage. So $6,000, if I look to the right, is 37.5% of 16,000. The second line, $3,000, is 18.75% of 16,000. And as I go on down, you'll see that's how it's established this percentage ratio. Where does that come in? When I actually sell this, RAR is going to then look at the amount that's in the sales contract. In this case, this item will be sold for $3,365. The next you can see the different numbers down here. You'll see a difference in this maintenance line because the maintenance is shown as per year and it's 3 years. When you take that $3,365 and then multiply it by the percentage, 37.5%, that's the relative selling price that then is used in revenue accounting for the deferral periods going forward. So this is the regulation in effect. It's actually automatically accounting for and then applying the ratio based on the standalone selling price that you have published within the revenue accounting module. So it's another step that's new that you'll need to maintain as part of the regulation, and this is how it plays out. Okay, so let's see the software. So I'm logged into my SAP system here. Hopefully everybody can see my screen. Here we go. Okay, so we're going to create a contract, and this is our contract vehicle. We're not in revenue accounting right now. We're just in an SAP ECC system. We're just using it as our contract vehicle. So in this contract vehicle, I'm going to be providing a contract to this particular customer, and I'm going to say we're going to sell these licenses. We're going to sell 3 of them, starting for a 3-year period. And so now I've got my first license, license A. I'm going to sell them, then they're going to sell them the second license. They're going to be purchasing on this one, license B. And then the third license, license C. Okay, so that's all that shows up in my sales contract to the customer. And whenever the customer buys this, it automatically includes maintenance, but it's not something they're billed for or invoiced for. It's something that we provide as a function of them buying this particular item with us, whether it's software or whatever that we're doing. Okay, let's just do one other thing here. Let's just indicate that we're providing these items to the particular customer here, which I've just done. For those that are interested, you can actually look at billing plans. Now, the billing plan is not revenue accounting. This is me billing the customer if I were to do invoicing or billing. That's all that is, but it's not used by revenue accounting. So let me go back here. So the total value of my contract is $8,028. You see that at the very top that I've got up there. Okay, so now I'm going to manually move this over into revenue accounting so you can see what that step looks like. So let's save this sales order. So that's sales order number 711. And now let's move the contract over to revenue accounting. Now, why am I doing this manually? Just so that you can see what the process is like. Okay, so here is a lot of stuff. And effectively, if I do my math, 3 times 36, that's how many items that are going to be updated into the revenue accounting module. Let's select them all and process them. So I believe it's about 108 that we sent over. So 36 months, 3 items, that's how we end up with 108 items being over there. There's 3 performance obligations that are created. So let's take a look at the performance obligations that were created for this new sales order 711. Okay, so I'm going to show you a couple ways to interact with the new revenue accounting module. If I grab the right screen and bring it over, there we go, that's better. I can interact with the standard SAP GUI, or I can use the SAP Business Client, which is what I'm in right now. So now I'm in the revenue accounting software. It's the same system I'm running on. There's nothing different about it. Let's look at that sales contract that we just sent over, and I'll say, show me the results of that revenue contract. And what it's done is it's created 2 revenue contracts per the new regulations. One's IFRS compliant, and one is US GAAP compliant. So I don't have to worry about being compliant with either of those regulations. It's done for me automatically. Let's look at the US GAAP. Okay, so now you'll see something different here. All of a sudden now, instead of 3 performance obligations, I've got 6. And what you're looking at here is you'll see the numbers that we talked about, the 3,000, the 1,500, off of that spreadsheet that I showed you. So there's what the price, the relative selling price that was sent over, and then the maintenance is carved out of those individual items. That's what you're looking about in terms of the allocation effect. We're carving out the revenue that then is going to be applied across maintenance A, B, and C, and then divide that by 36. So another way to look at this is, let's look at the revenue schedule for this entire picture. So I'm going to click on revenue schedule at the top, and so I can see right now, and let me just sort on the far left here, there's a column that says status. Light gray or white means it's recognized but not completely posted. The yellow triangle means to be recognized in the future, so it's a future period. And if I look kind of down here, just going to the right, I can see this is accounting period 4, which is why that's in the future. We are in current accounting period 3, which is why this is eligible to be recognized. Let's sort all these POBs by status. So I just did that, and if I look at this column revenue, and I'm just going to drag it over here so it's a little easier to see. So if I look at this column revenue, so I've got recognized revenue. That means of the 6 performance obligations created, the current month is March, so because it's a time-based performance obligation, I can recognize those right away. So if I add up the first 6 numbers here, the $83, 41, 1389, 50, 25, and 833, and somebody out there in calculator land, so to speak, it will equal this 222.23. What's also nice now is because revenue accounting is controlling this process, I can easily see the value of what's going on in the contract. So I can see that if I were to look at revenue, I could say, oh, my recognized revenue is $222 as of today. And going forward, this contract has a $7,700 value. The contract is about 3% complete. So it's because everything's in one place, I have that capability to be able to see that information at this time. Very nice, very good information, very straightforward to look at and see what is a component of what. At the same time, I can say, well, I want to get a little bit better idea of the picture of this thing, so I can just look at some simple view of this one. There's some straightforward analytics that are provided as part of this. So I can come in here and I can say, show me the contract schedule here. Maybe I want to see a little more information on it. There's the recognized revenue. Come back here. And I can see going forward, this is the value of the contracts as I go across time of what's going to be collected. Here's the revenue streams that are going to be going forward. I know that's kind of a busy slide. We'll take a look at that a little bit later. Okay, so what we did was we took an element straight over. So let's look at our slide deck again. And let's just kind of look at what we just did. So here's a little bit of a replay. And I put this in the slide deck. So what's nice about when you have a demo, that's great, you see it, but then afterwards you're like, oh man, what did I see exactly? So we included some highlight screens for you that are in the slide deck so that you can say, hey, here's what it looked like and this is what it was. So this is the revenue screen we saw, added those numbers up, equals that particular value. We looked at that, that's great, it did it for us. Now, when I eventually post this as is, so if I go through and do a posting run from revenue accounting, surprise, we have a new posting function we're going to be responsible for. In addition to other postings that I do a posting from revenue accounting, where that's where it specifically updates my general ledger, or actually any ledger over on the SAP side of the world. So whatever ledger I happen to want to send to, that's where it goes. So in this case, all these entries were created for just this 1 month. You can see I have adjustments, and I can track my numbers if somebody will sort of add these all up and kind of move them around. They'll add up correctly, and this is what SAP's revenue accounting is simplifying for me. I don't have to make all these individual entries. It's doing this for me automatically by virtue of me just designating that this is the GL account associated with this performance obligation type, or this particular item that's used in the performance obligation type. So that's the really beauty of it, is it's just handling and doing this for me automatically, and this is the end result of it when I move this across. Now, if I had an external system, in other words, I'm not using SAP Sales Contracts, this would again still update the SAP financial general ledger, and then I would then from there update whatever the external system is if that needs updating for whatever reason. Okay, so in this scenario, we just provided a license. We had some automatic linking of elements to that. We had a standard product with POBs, all linked elements. We saw how the SSP regulation is applied, and we saw what's called time recognition by SAP RAR. What it means is RAR is in what you call a fire and forget mode. You just leave it out there, and it just sits there and evaluates it, and it says, okay, period 4, and we're in period 4. Great. Okay, that's revenue that can be recognized. Next time you run posting, I'll update the GL for you automatically, so it's on autopilot for me as far as I'm concerned. Very nice from that perspective. Scenario 2, so moving on. So one of the things that's commonly asked for is, well, how do I account for project-based stuff, which really I don't have an SSP. In other words, my SSP is what the project cost is. It varies every time that I particularly do it. So we just did a simple example of how to do project-based type contracts using the current version 1.1. Now, in the next version 1.2, SAP is incorporating linkages to SAP's project system so they can do things like milestone billing. We don't know all the exact details yet. It's not officially released. In fact, we are a part of the early testing group that's going to be gathering next week and testing this and helping SAP go through it. We're actually one of the testing moderators, part of that scenario. So we'll be finding out exactly what they've got in there and how they want to apply it. But the biggest aspect, it will have projects. But if I wanted to start getting going now and try to do this without getting engaged, say, with the SAP project side, or necessarily do all the SAP projects stuff because I just have relatively stable projects or simple ones, here's a way we can do it. So let's talk about that. So let's go into the system again, and let's create a project. So again, I'm using the SAP contracting vehicle just because I'm there. I could have used any other contracting vehicle. And now what we're going to do is I'm going to show you a couple things here. So our project's going to have 4 phases. So phase 1 is going to have phase 2. It's going to have a phase 3. And it's going to have a phase 4. Okay, so let me just hit enter. You'll see this fill out. It makes a little more description. So my phase 1 is initial deployment. Phase 5 is where I indicate it's complete. Phase 3 is user acceptance testing, and then phase 4 is final acceptance. These are whatever descriptions that I want to use. Right now, each phase is indicated as a value of $25,000. But let's say for some reason the initial deployment, we're not charging the same thing here. So I'm going to show you something that Bramasol's added as one of the workarounds or one of the features within the system. So instead of this being $25,000, let's say, well, you know, we were doing another project with a customer and there were some issues there, or you know, they signed this quarter, so we're going to make this $5,000, and we want that to show up as also the standalone selling price. So what I did just now is I've just changed the price to $5,000, and I've made that standalone selling price. In fact, I can go back through for each one of these and indicate that I want the RAR system to see the standalone selling price as effectively the sales price that I'm doing. So I'm just doing this to give you an example of what it looks like, where we're taking an SAP pricing condition and we're injecting it over to the SAP RAR side specifically to help us see information and do the reporting, say, relative to standalone selling price. But we're not using it for the ratio or the allocation aspects of it here. Okay, so let's just, one more thing here. We'll just indicate this is our new project here. So we'll say this is customer project D. All right, so I just use a field out of the SAP contracting system. No particular reason why, just a little easier to find things when I do that. Okay, so here we go. We've got my project. And I would transfer this again, but just to make things simple so we don't go through that stuff, we have a workflow that actually is bird dogging the PO text field. And if it sees the word RAR, it will engage the automatic transfer over to the revenue accounting module. So another aspect that we add to make things flow smoothly for customers. So I'll hit save. And let me go back here. Okay, so it's gone across. It's sales contract 712. And here's the RAR contract that was created for me. So let's go look at that RAR contract. Okay, so here we go. We're going to take another look for it. So we're in our RAR system. We're going to look at 712. Interesting enough, it's the next sales order. And let's look at the GAAP version of this particular project contract. There we go. So as I look at it now, there are 4 performance obligations that are created here. And you can see that the price that I sent across, 25, 25, 25, is the price that's used as the standalone selling price. So there's no calculation, there's no ratio. What you see is what you get. So the revenue schedule is exactly what you'd expect it to be. And I'm going to show you a couple other aspects of how I engage with this piece of software. So I can see my revenue is $80,000, nothing's been done. And now what I can do is I can actually come back in here. Let's say that what I'm going to do is I'm going to go into our revenue accounting module and I'm going to manually fulfill this obligation. So I'm going to say, okay, this one here is, we'll say it's 50% done. So I've just done that. I'm going to say fulfill. So I'm in the revenue accounting module now. I'm not in SAP's ERP side at all. And I'm just maintaining my revenue accounting from here. Right, so now let's go back into my performance obligation. And let's do a refresh. Let's look at the revenue schedule. I just step out of this one here. That's done. And let's go back and look at my revenue schedule for this contract. And you can see here now that I've got, I said 50% of 5,000 is 25,000. I now have 2,500 that's availably recognized, and I have the balance that's sitting out there. I picked just that one POB that we looked at. I didn't look at the entire picture for the total revenue that's out there. So I'm using SAP's RAR module. This is the reason it didn't show you everything. Let's just deselect that and go back to the revenue schedule so you can see the whole picture again. So project is $80,000, 2,500 of it is now recognizable, so I completed part of that particular project, right? Otherwise, for example, let's say that I had an external project reporting system or updating system, so I'm going to go to my project updater right here. It's just a little custom screen that we did. I'm going to say I want to look at the US GAAP. Let's go look at that particular project, customer project D. And this is an example here. Okay, so this is 50% done. So let's say now it's going to be 100% done, and then the second phase is now going to be 50% done. And I'll say submit. So just an example of how you can drive and interact with the revenue accounting module. So those two have been updated, those two project phases with my simple little project updater screen that Bramasol created. And then if I come back over here to the revenue accounting screen and hit refresh, I should see some changes here. And in fact, I do. So now I'm at 17,005, right? I can see that there's been half of the second phase has now been recognized. It's now eligible to be billed, and all of phase one has been completed. So just to give you a simple example of how you can interact with the revenue accounting module with some minor things that you do over in the ECC world, or if I had an external system that was updating it, I can just update it from that. I don't have to do it from SAP's particular system. So let's just take a closer look. Okay, we saw the contract come across. We saw both principles created. I'm not going to spend a lot of time because we just went through this. We saw that the pricing condition that Bramasol created for this particular scenario, we've used it with customers. It's a way of driving from the sales contract directly into the revenue accounting module. And we ended up looking at that particular revenue, and we did some things to it, and it was fulfilled, and then we go. So we just saw these phases again. These are in your slide sets. Okay, and we also did manual fulfillments. We did two things. We actually went into revenue accounting and did the fulfillment there directly, and then we also did it from an external system, and the external system happens to be an SAP screen that we wrote for purposes of seeing that. When I post it, this is what it looks like. Now, this is a prior posting when I had the value of 25,000, not the 5,000 we just did, so that's why you're seeing 25,000, by the way. Okay. And then just to give you an example, so now we got 3 phases filled here, just to give you an idea. And the reason I did this is just so you can see what the posting looks like. So now here's 3 phases that have been updated. And if somebody's looking at the numbers there, you can see here's what the posting looks like going across. It's the delta differences plus the new things after phase 2 and 3 have been updated. So what we just saw was Bramasol's direct update of the standalone selling price via our pricing condition. We saw a multi-phase project, the update to revenue accounting, and the posting of deferred revenue details back to SAP ECC. Okay, so let's talk about scenario 3. Scenario 3, somewhat similar to scenario 1, and we're not doing the linked part here. We're going to make a change to this one here. We're going to change licensee from 12 months to 6 months after we've created it. So let's go back to the SAP system, and let's go ahead and create that contract for ourselves real quick. So here's my contract. And I'm going to put in some start dates. We'll just start it, and we're going to say this is a 1-year contract. There we go. All right, and it's going to have 3 license items. There's not going to be any linkage on this particular one here. We're going to keep this as simple as we can just so you can see the effect of that. And license G. Great. Okay, we got that. All right, let's just indicate that we're going to be actually using these particular items from the contracting side. Okay, so everything's all set up. All these are just defined as a 12-month term. And we'll just use our quickie workflow shortcutter there to transfer over to revenue accounting. The value of the contract is $27.67. Let's go ahead and save it. Okay, so now it's over in the revenue accounting world, and that was contract number 713. Let's take a look at contract number 713. All right, and let's see how it came across. So if I look here, I can see if I look at the revenue schedule. Now this one had standalone selling prices like the other one here, and I can see I've got $230. So I go and highlight on stat. You can see here, there's the first performance obligation. If I kind of look down towards the bottom, here's the second one. I'm just going to highlight by status so you can see the three that are eligible to be billed because we're in the period 3. And here's the accounting period indicated for, because we said the contract starts this month. And it did that allocated value based on the standalone selling price. So that's why these numbers look different, divided by 36, and then here you get this value. So if I take these numbers over here under revenue and add up these first 3 here, that should equal 230.65. Okay, so now what I'm going to do is this. I'm going to go into this contract now, and let's make a change to the contract. Let's say for some reason the customers decided to shorten the term on this particular contract, license E. So we'll just go to our contract data, and now we're saying they're going to cut it down to 5 months. So we're just going to cut this to 5 months for this year, and go back. Okay, so now we've got 2 is stated this original term, 1's been shortened to 6 or 5 months here, and we're just going to leave our automatic updater. It's going to update the revenue accounting module again. There's an indication of my update. Let's go back and let's just do a refresh on this particular contract that we just updated. There we go, and let's look at the revenue schedule for the item that we changed. So we can see here that there's been a change to it. It's now, instead you don't see 12 of these here, you see 5. Also notice that the revenue, which I'm column dragging over here so we can just see it, has now changed. So the revenue, instead of being 100 and some odd, or was 83, is now 344. So it took that number and it's allocated it across multiple periods of $344. Now, the question you might ask is, okay, what happens if I had done a posting of that particular item out there? Right? So let's take a look at one that we did posted earlier, which is exactly the same as this, just so we don't have to go through all the hoo-ha of a posting out of revenue accounting. And let's see the effect of that same process. So I have sales contract 708, and let's look at the GAAP version again. And now we're going to look at the revenue side of that one performance obligation. So we're going to look at the revenue schedule of that. And since we did a posting on those from prior, you're going to notice over here on the right, notice what it's done here. There was a posting done of 138.39. That's when this contract was at 12 months. That's this column right here that I've got my mouse, I'm kind of highlighting here. And then we see the new revenue of 344.18 because we didn't close the period, by the way. In fact, if I closed the period, this would look different altogether. I just did a posting mid-period, if you can think about it that way. So what's going to happen is the next time that you do a posting, it's actually going to post the difference between what was previously posted and the new value of 344.18, which is spreading the price of that item across 5 months instead of 12 months. So totally takes into account the fact that we have posting done and actually shows it to you so you can see it exactly, and you say, oh, okay, great, I got that. And you can actually look here in the write-up here. It shows you exactly how it operates from the perspective of the recognized revenue, the posted revenue, and the percentage of contract that's completed for this particular line item. So let's go back to our slides and talk about what we just saw from that perspective. Okay, so we brought the contract over. There was our revenue stream, 138 at 12 months. This is what a posting looks like when you get there. So 138.39 was the 12-month picture. Greens was posted. So when I posted that 708 earlier, that's actually what you would have seen. But then we made a change. So we did 2 things simultaneously. Now I've come through and I've made a change, and now you can see here's the new revenue, prior posted amount, and now the new reallocated amount across 5 months versus 12. So we saw a multi-year contract, and we saw the effect of a change in term on RA posting. And I mentioned earlier, by the way, that one of the things that is nice about having RAR there is I have a way of seeing everything within one area, so to speak. So it's very clean from that perspective that I have the ability to do that. And that means I can do some dashboards and analytics that give me a nice insight into the software. Here's an example of just one of the standard reports. We looked at a piece of this earlier. And then because I have all the data in one place, I can do some interesting things and look at it from the perspective of other analytic tools. In this case, I'll show you an example where we use Lumira to look at the data set here. So let me just drag this over. And here is my Lumira dashboard here that's being built up right now. There we go. And let's just get a little bit better look at it. And let's look at the story that's painted here. And let me expand this out so it just looks a little more interesting for everybody here. We'll do fit page. Okay, so this is off the live system now. It's a Lumira report reading directly off the SAP accounting system. I can see of all the contracts, there's a total of $333 million in all deferred revenue contracts. I've got $150 million in planned revenue, means it's not been collected. It's just sitting there planned waiting for something. Of that, $44 million is unscheduled, which means it needs somebody to do something. And what's interesting is I can take a look at these and expand this out and say, geez, what does this particular graph mean here? So this particular graph, the way it works is for the year 2015, it's showing me by planned revenue, unrecognized, and recognized revenue, what the value was over each quarter. And I can see in Q1, great, looks good. Q2, nosedive. Q3, nosedive, and that's when I get on sales and everybody else saying, hey, get your butts in, get your people in gear. And then Q4, pick back up. So because it's in the revenue stream and deferred revenue, I can see that information now. And I can look at it from different perspectives. Over here, if I look at this particular, seems like a really busy pie chart. I did this by percent complete. So now let's just highlight this and look at this from percent complete. The gray says of the projects, of the contracts that are at 49% complete, there's the planned revenue remaining on them. What about this green one? This green one says, geez, there's $39 million of planned revenue and of only 3% completed. So maybe I should start to look at that barrier and understand why I'm showing such a high, such a low percent complete of the contract and a high planned revenue. Of course, there's a result of that, so I can direct my activities out there. What's my next guy out there? 50% barrier is in second place. Why am I not seeing like 75s and 80s and things like that, which is what I'd expect? So just a quick look when I have analytics in place. This is in the slide set also, another kind of dashboard. You can look at a tag cloud. You can look by POB type. So you can see what, if I'm doing a lot of services, software, deferred, maintenance, warranty, things like that, I can see that kind of information. So one of the things that we do is that this is offered up in the cloud. Again, it allows us to quickly prototype it. And because it's an engine, it can actually integrate to SAP and non-SAP environments. You can use it in an engine and get straight into those particular environments. So we're running a little on the long side. I do apologize for that. Let me just turn it over to Larry here, and he'll talk to you about our general steps here, and then we'll move forward. Larry?
Thank you, Chris. So Bramasol's proof of concept approach is basically 5 steps, and it's designed to help you determine the overall impact to your company. We believe that knowledge is power, and we work to get your subject matter experts immersed in the project throughout the POC. So we want you actually in there configuring things. And by the end of the POC, you'll be able to do that. We help you evaluate the business impacts, and where possible, we pursue design thinking. Lastly, we help you determine what the next steps are, and so that we can transition the POC or pilot into a revenue recognition project. So why Bramasol? We have the expertise, the processes and tools, and the experience to help your company be successful. We've participated in the testing of all the SAP RAR releases, including the latest release, 1.2, as Chris mentioned earlier, which is scheduled to be delivered in late June. We have a center of expertise driven by subject matter experts who have been on multiple RAR projects, and their combined knowledge is available for all of our consultants, our partners, and our customers. We have a cloud-based SAP RAR solution, and companies are leveraging that to help jumpstart the projects or even host the projects. And then Bramasol is and will continue to be the leaders in revenue recognition. Okay, what key points have we covered? First, don't wait. 2018 is just around the corner, and the time to start is now. 2, SAP RAR simplifies compliance through its ability to handle revenue scenarios and its reporting capabilities. And third, Bramasol can help you through our experience with and key insights into revenue accounting. So this concludes the presentation section of our webinar, and we are now open for questions. Chris, the first question is, are the Lumira reports part of standard RAR?
No, the Lumira reports are not. It's an add-on that we typically recommend. Lumira is a standard SAP software. One of the reasons we like that, and also the new Cloud for Analytics, it allows us to reach directly into the ECC system as opposed to putting in infrastructure. Many of our customers we find have existing infrastructures in place, be it Bob J type environments or BW type environments, which are compatible. You would just need to feed those as you would from any other ECC component.
Okay. Our next question is, does RAR also handle cost recognition? And if so, how is cost recognition handled in RAR 1.2?
Hans, well, I'll let you take that one.
Hold on a second. So the question is, does RAR also handle recognized costs? Is that the question?
Yes.
Yes. So yeah, unfortunately, right now we have only workarounds for costs. So we can, for instance, put in negative numbers. We can obviously channel in discounts from SD, but it does not directly handle more complex, really true cost accounting. But that is only a temporary issue because it is part of at least the core cost recognition component is will be delivered with the 1.2 release. So from next week on, we will be testing that, and then we will be able to tell you more about how that works, and we can work with you to see how closely that matches your requirements.
Thank you, Hans. Our next question. Can data from the operational contract be transported to RAR to use in calculating total transaction price and allocating value to different POBs for recognition?
Hans, I think you did something similar to that. You want to take that, please?
Yeah, so in principle, the answer is yes. So because obviously RAR itself is really like we're always saying, right, like was mentioned already multiple times, is an engine. So it calculates values, so they have to come from somewhere. So yes, they come from the operational systems, whether that's SD or something else. They will be brought into RAR. They're not really transported, right? So it is basically that's basically what we've seen, right? So Chris put in a PR00 condition type in that case, an SD, and then it was brought over, and that is, if RAR is on a separate system, it will be brought over by RFC, via an RFC call, and it will be brought into RAR. Obviously, you have to define in RAR how to read that data and so on. For the standard components, that's all predefined, so it should just flow by itself, basically. But for your own components or for file loads, for interfacing and so on, so elements that are not yet, so components that are not defined from SAP side already, you would have to define that. But yes, the idea is exactly that the values of both the transactional prices as possibly also the standalone sales prices will be brought in from the operational system into RAR, and then will be recognized there. Exactly.
Thank you, Hans. Our next question, and Hans, I believe you've worked on this before. How do we satisfy dual reporting requirements with classic GL?
Yeah, so SAP has two approaches to dual reporting. Well, so the dual reporting, I'm not 100% sure if this is probably referring to the dual reporting old versus new guidelines, right? But in effect, the answer is similar to what it is with overall accounting principles. For the dual reporting requirements, we actually typically recommend to do an account-based approach, right? Because you could also handle it via parallel ledgers, but then you would have a problem the moment that the leading ledger. So let's assume you're building. Let's assume you're starting to run RAR, right? And you're running in parallel the old guidelines and the new guidelines, right? So you could obviously post that to different ledgers, but the problem then is that, well, right now your leading ledger would be the old guidelines, and then you would have to switch to a different ledger, leading ledger for the new guidelines. So that's why for the guideline question, we recommend account-based. If you have classic GL and you have multiple accounting principles, the answer would also have to be account-based, right? In our training system, we actually also use account-based behind the scenes. But both of those ways are available, right? Does that make sense? Does it answer the question?
They were asking about during the transition period.
Yeah, so then it's clear it's really the dual reporting in the sense of old versus new guidelines. So our recommendation is to do that by account-based. So use different accounts for different calculations that you're doing, right? And then basically just pick the right account for the reporting. Yes.
Great. Thank you, Hans. Our next question is, what is the impact of prior invoicing in current ECC called deferred revenue to the revenue recognition?
Yeah, so I mean, these are all very close to me, I think, to my area. So yeah, so effectively, so this kind of like is a little bit like also asking what happens with the old VF44, right? Current ECC called deferred revenue. So the reality is we can fully replace that. So the system, what the system would do is we would basically say, okay, there should be a revenue recognized, so you fulfill your performance obligation. So well, this is actually prior invoicing. So you invoice in advance of the fulfilling the performance obligation. So in that case, you cannot recognize the revenue. So the posting that comes from, let's say, SD, for instance, goes to gross billed revenue. Then the engine will realize, well, there's nothing fulfilled yet, so we don't have the right to recognize revenue. So it will basically offset that, move it first of all into a specific adjustment account, and then from that we'll basically move it at the period end when you do the postings. It will move it into a deferred revenue account. So you come out the same way as with VF44, but a little bit different because the system is always going through an additional adjustment account to really figure out whether the performance obligation, the related performance obligation, was fulfilled.
Thank you, Hans. We have time for 2 more questions. Our next question is, how is RAR integrated with S4HANA? And then, is it better to go live with S4HANA, or can we go live before S4HANA?
I'll give you 2 answers to that one. SAP smiles upon those to go to S4HANA, and RAR is 100% in S4HANA. And the second answer is there is really relatively little distinction if you go live with ECC using RAR and then do your upgrade into S4HANA. There's, from the revenue accounting perspective, there's effectively no different.
Okay, thank you. And the last question we have time for today is, does RAR work with customer service contracts in SAP?
Yeah, so I'm not 100% sure about that. Theoretically, that integration should be there, but we are at least right now internally, we're not testing those scenarios. But in any case, it would be just an extension of existing components and interfaces. So theoretically, it should. Now, we might not have all the events or all details behind there identified already from SAP, but we have found with some customers that are a little bit that really want to be ahead of the curve, that they have basically for specific pieces of functionality that are not there, they have basically built their own customizations, which is really a limited customization. So, for instance, one example, we've had one customer who has worked with us and has come up with a kind of like a small customization to make call-off orders work, which is not yet in the current release.
Thank you, Hans. There are several other questions. We don't have time right now to answer them, but we will answer the questions and send them out to the group. So this concludes the question and answer section of our webinar. On behalf of Bramasol, I would like to thank everyone for attending this installment in our series on revenue recognition. Our next webinar will be in April. More information about it, including topics, will be sent out shortly. You can also see the latest information on our website at bramasol.com. If you have any additional questions, please reach out to us or feel free to include them in your survey. We will answer all questions as soon as they are received. I would like to thank everyone for attending and hope you have a great day. This concludes our webinar.